Good afternoon, everybody. This is Dan Hussey with AlgoDayTrader.com, bringing you our October 10th, 2013 NYSE session recap. It is 4 o'clock Central Standard Time, 5 p.m. East Coast. So we are basically sitting a half hour after the NYSE close, well, an hour after the NYSE close, half hour after settlement. But we very interesting S&P today. I mean, we talked about the 1640s. We could talk about the extension short, same anchor new low breaks, the long that traded. We could talk about that some more, but the reality is we had a series of longs and are now looking for a brand new extension long drawn from the 76, 87 anchor to highs. If for whatever reason we'd get no reaction here, we'll just go back to pulling our prior extension, the 66 anchor to high. So overnight support, we're basically sitting on top of support. We'll go down to a micro chart now. We're basically sitting on top of support right now at the 1682 figure. Below 1680, 77 support, and below there, it'd be tough to be a buyer at a full halfway back long, but we would have technically support down to 1664s. Stepping back out to that longer time frame chart, we do want to point out that we have run into, and albeit it has not gotten any reaction so far, 1682.83 is the full halfway back short for the S&P 500, drawn from the all-time highs to the 1640 low. It got no reaction first test. We cut right through it. Cut through it almost 6 points, and we ended up, we're sitting right at it now. But this broken resistance is acting as, or should act as, a support level for our little extension we're watching. Upside targets here. We'd be obviously looking for a break of the 1693s, and a break of the 1693s would open the door for, an ambush long to be drawn up. And I mean, we're looking for the market just to head higher here eventually. We'll see. We'll see if this plays out over the next session into tomorrow. But this is one heck of a daily candle. I mean, that's some power right there. We not only erased yesterday's sell-off, we erased the entire sell-off for this week. Let's take a look at the weekly candle so you can see what I mean. Completely erased the entire sell-off this week. And that is not a weekly candle I'd want to be a seller into. Now, there is tomorrow. Anything could happen. I mean, we could close the week back down at 1640s. Market could fall off just as fast as it came up here, but the reality is that the long traded, longs have gotten reactions, and we have a very clear series of micro and 15-minute measured move longs off that major 1640 low, and we can't ignore that. These are the types of markets and the types of moves we look for, we wait for, we anticipate, and we're so patient for. So 1686.75 is our gap fill for tomorrow. So both the 77 and the 82 seem like great logical support levels for the market to trade. For the market, and then could trade up into that gap fill. So that about sums up the S&P for today. Just a very technical, very fast, good moving market. British pound, really nothing has changed. There is the potential for full halfway back at the 59.50 area. We'll see what happens at the 59.90, 160 area. There could be some resistance there, but ultimately the British pound is coming up off of a 61.8 line / 50% long, depending on how you draw those larger time frame extension longs. So we do see continued upside for the pound from these levels, and I don't hate the idea of being a buyer on a dip overnight. It's just today, and what we've seen is that it has been all about the yen crosses and not so much about the and not so much about the dollar at this time. So unfortunately, it doesn't look like, well, hopefully over in the next session we get some kind of catch up the dollar plays, because all this rally in the S&P has had almost no effect on the US dollar, but it has had a great effect on the yen crosses. The euro, very sideways, mixed price action right now. We are holding a next in the series short, which is a little worrisome at the 35.50 area. Again, just like the pound, we've held a 618 line of the long that we took. The 618 line was also the 50% line of a larger extension long, or another extension, actually the logical extension, where you would actually technically draw the extension from, would be a 33.24. So this very well could be a bit of a dirty slide right into the US Open, and then all day today we really have held the 35.20 area as a support and into the close here. So we'll see if we get some upside potential. I'd like to see us trade into the 35.60s overnight, break that short, and then after that there would be the potential for an ambush long in the direction of this larger swing towards a 137 profit objective. Okay. If we do break down and we go through the 34.80s, I think the door is pretty much open for a 33.80 full 240-minute next to the series long. That's a 240, the 4-hour long. The 4-hour long that traded prior to the 36 targets. This is the 31 anchor, the entry point to the target high. So it's just the 33. That's what the 33.80s are. And so keeping a close eye on these, and of course a close eye on the euro, as today we basically closed with a doji, almost a doji. I mean, it was very, very close, but have a double bottom here, and have two nice long wicks. So we're basically looking for the euro to pretty much rally right from this level. We want to see it just continue up and go through today's highs, which is again above the 35.50 area, and that's going to be, you know, the kind of breather room that I think this trade needs. While we did get free, which is all we really care about, and the trade is technically free, again, we need to, I mean, the market needs to show us something here, because this dilly-dallying at lows, you know, there's always the potential for it to break down. But it did get us, it did get us free, so it's really what's important. Aussie dollar, one of the more bullish looking markets right now. We've traded down and into the next in the series long, which is a Globex long from today, traded at the 94.20s. Then drawn from the 94.20 lows to highs, we have the 94.40s that have traded now. So we have a 94.85 upside target going into the overnight session, with a larger time frame upside target of a 95.30 from the larger hourly swing, the extension long that has, I'm sorry, the extension long has a 96.30 upside target, and there's a full halfway back long that traded a front run and has a 95.30 upside target as well. So definitely looking higher in the Aussie US dollar. Good risk on trade, good carry trade action here, so we'll see what happens overnight. I guess we can talk about gold real quick before we move into the yen crosses. There was stepping out to our hourly chart, we know we're between these bigger levels, but the shorts are starting to look like they might be more in control. There's a full short from the 1375 swing to the 1276 lows. 1326 is held. Inside of this swing, there is a full short, an ambush short that traded, went to target today. We'll be drawing up the 1314 anchor to those lows to search for our next in the series. But going down to like a 5 or 15 minute chart, we can also draw up the 94 anchor to lows here and see that there is an extension short drawn at the, or that comes in at the 1287s that has also gotten a reaction so far here. So there is a potential brand new extension short on gold, the 15-minute time frame that could take us lower and potentially down and through those 1280s, as the downside target is at 1278 here. So it's kind of do or die for gold. Things could get slippery for it below 1280, and you know, there's not much in the way for $300 all the way down to that 960 area where the full halfway back long for gold is. And that's where, if I was looking to build a long-term gold position, I'd be waiting for that personally. And I'd be also wanting to try to buy physical gold down there versus paper. But that's, of course, there's a premium for doing so. Alright, the dollar yen. Again, we talked about this earlier today, how we've coming out of what we call an ending diagonal. We talked also about how ending diagonals tend to reverse the entire diagonal, which means we still have a 98.60 upside profit objective just from the ending diagonals kind of reversal move. A valid 97.40 buy on the dollar yen would be a full halfway back long. But currently we are still holding a series of longs, trading once, twice, 3 times, and now the 4th time drawn from the 97.60 anchor to highs traded, and has a 98.40 upside target. So definitely got a have a upside potential in the near term, as well as major support that could be the reversal support the dollar yen needs to continue higher, and really eventually we want this thing to break up or down out of this triangle. In other words, this wedge formation where we have lower lows and higher highs that have formed, and it does look complete, but it has looked complete before too. So that's the problem with wedges, is that they can just keep going and going and going until they just decide to move. But in the near term, longs have been in complete control over the last couple sessions, and the dollar yen really did find a bottom and reverse before the S&P, which was another good thing to see. Euro yen, I'm going to skip it. There is a micro extension long trading, but ultimately we're coming up off of this 31.40 level, and that's about it. Really, it's the bigger levels trading. Alright, and now to the Aussie yen, which we have working orders, which we might pull because it looks like it has traded, but we didn't get the fill. Down at the 92.71s, as first targets have already traded from this extension. It's drawn from a 92.40. It's the second in the series. We've seen it trade once to target, same anchor new high. Has traded again here. We can always take it a third time if it trades, but we do have an upside profit objective of a 93.20 now, and 93.17, and that would actually break this full short that the Aussie yen happens to be in from its prior swing. And after breaking that, we could always do a halfway back long. So we'll see what happens here. This looks like a wedge that broke out to the upside. In terms of Elliott wave, if I had to guess anything, this was an A, and this is all part of a B wave, so we could potentially still see a move down to the 90.40s, and if we do, I like the idea of being a buyer down there, because that is technically the large ambush long down at 90.40, 90.50s of the 4-hour trend, and all in the direction of the big 87 long that has a 113. Yes, 113 profit objective, and of course a daily swing like that is, could take a year to play out. So, in the near term, there's a great series of 5-minute longs that we can trade and we can track, and that's what we'll do. So, have a great night, everybody. We'll be back with you tomorrow, as always, to close up the week. But I think I'm going to make the decision here to pull the orders for the Aussie yen. Unfortunately, we just didn't get the fill. So I'm canceling that trade right now. And other than that, have a great night, everybody, and we'll be back with you as price action develops.